Hey friends! Welcome back to another video on my channel. Today, I want to talk about a topic that, once you fully understand it, will completely break down and rebuild your ICT trading style from scratch. Have you ever noticed how often you enter a trade, the price goes into profit, but you're constantly stressed? Your heart is racing, thinking, what if the price reverses and hits my stop loss? Or maybe you have no idea how or where to trail your stop loss as the price is moving. Should you place it above this swing point here? Or behind this FVG? Michael, the creator of the ICT style, has an incredibly vital rule for this exact confusion called the 3PD array failure rule, or the 3PD array rule. Today, we're going to dissect exactly how this rule acts like a compass, showing us shifts in market delivery. So without further ado, let's jump straight into the charts. Alright, now we want to see if the price is inclined to reverse from here. Why? Because it has reached an important FVG. So, we want to see whether we should take a buy position here or not, and where exactly to take that buy. Let's see how the price reacted when it reached this FVG. Well, first of all, we have an FVG right here. The price comes and passes right through it, so our first PD array gets failed. After that, this last down close candle that we have, see, its body is lower than this one. We came and closed above this candle, so we have a change in delivery. Therefore, this is our second PD array. Alright, so up to this point, 2 PD arrays have failed. Next, we get to this long shadow, which has also been failed. I've already explained about shadows in the previous videos. So, up to this point, 3 of our PD arrays have failed. Now, as you can see, the price hasn't reached this high of ours yet for us to say an MSS, market structure shift, has occurred. Now, why did we consider this high for the MSS? Because this is our intermediate term high based on the definition we provided. And why? Because it has come and filled this FVG. Now if you have noticed, in many of his trades, Michael enters before this high gets broken and the MSS occurs. He usually enters the trade right at this FVG. Why? Because visually, his eyes are so well trained that as soon as he sees the PD arrays getting failed, he enters without even needing and misses. If you are a beginner in the ICT style, work on this concept extensively and dedicate time to it, because these are very important. So, the price comes and passes through it, and if you knew this tip, you could have entered the trade right here at this FVG and ridden it up to the next buy-side liquidity. Now another point, what is this here? Initially it was a high-resistance liquidity run, and here is also our rejection block. The price came, reached the rejection block, and retraced. To where? Into the discount array. From here to here is below 50%. You could have also entered right here, which would be a safer, more reassured entry. The intermediate term high has been taken, but the liquidity still hasn't been swept. See, the buy-side liquidity still hasn't been taken. Instead, what has it created for us now? It has built low resistance liquidity. Do we have an FVG below 50%? Yes, this FVG right here, and these candles are respecting the fair value gap. Alright, the price comes, pushes off this FVG, and goes to take out the buy-side liquidity above these two highs, which have now turned into what? Low resistance liquidity. Okay, now that we've come all the way up here, the narrative might be that the price could go even higher. So, now that the price has reached this rejection block, I want to come back and do what? Count my PD arrays again to see whether the price will move from here toward my low or my stop, or how far up I can trail our stop loss before this next move begins. Alright, here the price comes and reaches the rejection block. Now, on its retracement, we want to count the PD arrays that have failed and see how many there are. Well, the first one is here. Where is the open of the candle? Our last green or bullish candle is right here, so here we get a change in the state of delivery and an order block is created. Now, where is the second array? This long shadow, this becomes our second PD array. The price comes and passes through it, so this becomes the 50% of the long shadow, consequent encroachment. That's item number 2. And what was item number 1? The CISD. After that, what do you have here? You have an FVG, see this one? Now, were we able to close below this FVG? No. So our FVG still hasn't failed, meaning our 3 PD arrays are still holding their ground. If the price had come and closed below this FVG, what would have happened? The price could have moved downward again. Alright, now we want to consider the upside. Okay, let's say we were waiting, the price came down, and we don't know any of these concepts. We don't know intermediate term highs, and we don't know discount and premium either. We just want to see if we can scalp this buy-side liquidity right here. Now, what do we want to do in this direction? We want to find our 3 PD arrays. What is the first one? Right here, it's the order block. This becomes our first PD array that failed. What is the second one? This FVG. Did we close inside/through it? Yes. And what is the third item? This long shadow that we have here, which is also synchronous. Now, what kind of high is this high? It's an intermediate term high. Why? Because it has come and filled this imbalance. So, you had a long shadow that failed, you had a change in the state of delivery, and you had an FVG. Therefore, 3 of your PD arrays failed right here. Now, in this scenario, if we wanted to take a buy, based on what logic could we have done so? Because it has come and formed an intermediate term high here, and the close was above the FVG, but it didn't pull back to it for it to become an inversion fair value gap from here, so we could trade it up to this high. How can we understand this? We can tell from this intermediate term high. See, within this shadow, an intermediate term high was formed. You have both a change in delivery and in market structure shift. Now, in this scenario, on this candle becomes what for you? It becomes your breaker block, which has come and taken the sell side liquidity here. Let me clean all of this up. I'll erase this, and I'll erase this too. Sell side liquidity was taken. How do we have a simultaneous MSS? Because it was an intermediate term high, and the last candle before this intermediate term high becomes what? It becomes its breaker block. So you have a breaker block right here, and on the pullback to your breaker block, at this exact point, it has reacted right at the 50% of the breaker block. Now, this is on a 1-minute time frame, but I'm just giving an example. Whether it's a 5-minute, 15-minute, or 1-hour time frame, the rules are exactly the same. Whether it's a 1-minute time frame or a higher one, the rule always remains the same. Alright, now that we've come this far, let's come up here, once the buy-side liquidity is taken, and count our PD arrays again. Let me also mention one thing. Look here, suppose we took a buy position right down here, and we held it until buy-side liquidity was taken. Now we want to decide whether to hold our position or not. Look at this pullback we had. Our 3 PD arrays didn't fail. But here we say, okay, buy-side liquidity has been taken. Should I hold my position? Should I break even my stop, trail it to my entry point, or just leave it right under there? If I want to trail it, how far can I trail it? Is it going to go higher from here, for instance, doing something like this and then pushing higher? Or is it just going to come straight down and hit my stop? Well, we go ahead and count the 3 PD arrays of this last leg. Where is the price right now? For example, it comes right here. When it reaches this point, what do you have? 1. A CISD. 2. What else do we have? We have a fair value gap here. What else do you have right under here? Is it an intermediate term low or not? It has a short-term low to its left, and another short-term low to its right, so this becomes an intermediate term low. Where do you move your stop? You trail it right under this intermediate term low. Now, if this gets taken out, what happens? Both your short-term low and the FVG here get broken, which amounts to 3 failed PD arrays. The price comes, takes out the short-term low, moves into this FVG, and drops. Now, let's say you took a sell from all the way up here. You sold inside this FVG. Let's see, it's better here because an intermediate term low was taken and 3 PD arrays failed, so you sell and ride it all the way down here. Suddenly, look at what happens, it makes a pullback. What should I do? We get scared. I took a sell, where should I bring my stop? Should I bring it here, or not touch it at all? For instance, let's say my stop loss was originally above this high or that high. Well, the price comes back up to hit the stop. How can I realize that the trend has changed? As the price is moving up, you count 1. The first PD array, an FVG, failed. 2. Inside this candle, a second FVG failed, so that's 2 PD arrays. When it reaches this candle, if you had taken a sell position up here, the moment this candle closes right here, you close your trade with a profit. Granted, it's a smaller profit because it retraced 3 candles, but you don't get stopped out, you are still exiting with a profit. See, if you had entered here, even if your stop was above this high, the price came down and gave you about a 1 to 2 or 1 to 2.5 risk to reward ratio. You didn't close it, for whatever reason, expecting it to come and take out this low. You also didn't take into account what was underneath here. It was a high resistance liquidity run into its order block, so you should have closed it at the order block. Where is the order block? Here. You should have closed it there, but you didn't, or you weren't paying attention. Now the price comes up, and on this candle, you exit with a 1 to 1.5 risk to reward. If you didn't close it on that candle, you absolutely must close it on this one. Why? Because another PD array failed here, which was a long shadow, wick. Why should you close it here? If you didn't close it before, please close it here, because this is an intermediate term high. Just take a 1 to 1 and secure it. It's a 1 to 1 trade with a small spread. So, when the price is right here, I count 1 PD array, 2 PD arrays, 3 PD arrays, and I have an intermediate term high. I'll just bring my stop loss right here and say OK. And in the exact same way, as the price goes lower, you count 3 PD arrays, and you trail your stop right above that third PD array, and most the fourth one. Do not trail it past 4 arrays, or it will come and hit it. My recommendation is to go on your charts right now, either in the live market or through forward testing, and practice this 3 PD array rules so that your eyes get trained to see it. Thank you so much for staying with me until the end of this video. Don't forget to like and subscribe, and until the next video, goodbye.